Hey, welcome back, everyone. Let's talk about the most recent trade that I did using my youngest son's account. You know, everybody's down. We're trying to find that spot where we feel like we can get in and not have that catching a falling knife effect. Now, we may have found a bottom, and we had this tremendous run today where DPST rallied some $12 and spiking and absolutely running, just like most all of the 3X leveraged ETFs that we trade. I'll tell you what, when I placed this trade, there was a reason why I selected DPST and I didn't go with TNA and I didn't go with SOXL or UPRO. You know, I really felt like although they're all down, crushed, and we feel like we can't wiggle out of them just yet, DPST found itself in and around 52, 53, and I think it was even down further. I think today it hit 48. I decided when it was trading at 54, thinking that 46 was its bottom. Now I'm going to show you on a chart why I picked the 46 strike. That was very intentional. You know, when they're throwing the baby out with the bathwater when it comes to a lot of these things, you just don't know where the bottom's at. Using the simple idea that these are the banks. You know, it's one thing to sell off technology down. It's one thing to sell off semiconductors and all of these incredibly high valuation stocks like Nvidia, Apple, Microsoft, so on. But these are the regional banks. This is 50 of the biggest, best regional banks. Now, they had sold this off. And I'll tell you, if you follow FAS, which is the 3X leveraged ETF to the financials, the biggest financial companies in the world, that had fallen off to around 104 at this moment. So I could have either gone with DPST trading around 54 or FAS trading around 104. Why did I pick DPST? It had everything to do with the idea that the financials have been ripped. And the question is, what do the financials have to do with tariffs? I get why AMD would be down. I even get why Tesla would be down. I understand that, you know, those tariffs are going to affect those products those companies sell. So when they come in and out of those countries, they're going to get hit with tariffs. Why would the regional banks be ripped in half? Look at this. This was literally trading after the sell-off 136 all the way down to where the market sold off to 10%. This thing sold off over $60. Now I'm sure they're talking recession and all those things, and you're thinking, well, the banks, how are they affected by a recession? Well, you would think they wouldn't have as much business. But that sort of sell-off, even a 3X leveraged ETF, that just seemed incredibly deep. And then it rallies back to almost 100. So this thing moves in incredible swings. And when we fall all the way down to 46, I'm thinking, you know, the financials, we're talking the financials and the banks, something that they will rally back when the markets rally. You know, you'll hear different people say, when they rally back markets, when you have corrections and crashes, they always rally back the financials first. And I'll tell you, that was questionable. Because when we look at FAS, which is the 3X leveraged ETF to the big financial companies like JP Morgan, Goldman Sachs, look at this incredible run. They were tapping out at the top, very similar to the S&P 500. The S&P 500 tried to make a new high, what seemed to be 7 times, just like this. Funny how those trade alike. Well, there we get the sell-off, and that was the canary in the coal mine. We should have all seen that. Then it falls from 188 all the way down to 135. That's a $50 pullback. Well, of course, you're not going to sell now because you want to get to that 10% on the S&P 500, so you get the rally. And then you get the rally back to 165. And of course, we get it being crushed to 92. So what this is this is just risk off. The markets woke up over the past couple days and said risk off. They're making phone calls saying risk off. And what that means is you sell, sell, sell. When it's time to get back into these things, like we did today, look what happens. They rally the financials. Hey, very similar to rallying things like AMD, which incredibly rallied some 23%. AMD is like literally left for dead. It's rallied 23, 24%. Everything is sold off to the point there's no skin on the bone. My first opportunity to put any sort of money into this market, well, the very first thing I do is I go to the financials. I didn't go to TNA, I didn't go to SOXL, I didn't go to UPRO. I went to DPST because these are the banks. These are what's going to pull the market up if technology doesn't do it first. These will pull the markets higher. The financials will move higher. So what I decided to do, I did that 46. And why did I do that? When they threw the baby out with the bathwater, we literally had 2 down days where the NASDAQ and the Dow was down some 1,000 points. DPST got as low as 46. That's when we get this little rally higher. It does finish red on the day, but we're in and around 54, and we put on that 46 cash secured put. What I want you to notice is this. Look at that premium we got for that trade. When it's trading for 54.50, we were able to use the 46. That's some $8. That's some $8.50 away from the strike price. We got $4 for that. These are the kind of trades that we can make right now. Because although you're saying to yourself, man, I don't want to catch a falling knife, what we have to do is focus on sectors now. Focus on indexes now. I know you're saying to yourself, hey, look, why would I do that when MSTX ripped 48%? Well, look, I don't know if MicroStrategies is going to be pulled higher. I don't know if Tesla is going to be pulled higher. So for me, a single stock risk is still out there, although we did get these incredible short selling covers, and that's what happened today. The shorts covered their positions. What I'm going to tell you is this. We are not backing away from using the indexes and the sectors. Putting money into these things, I'm going to try to cherry pick the sectors that I haven't been working in. And I'll tell you, man, DPST being the regional banks of the U.S., I am going to find myself here. I also like FAS. It's $100. Well, it's now $130 stock, but keep an eye on the financials. These are the ones that Wall Street comes back. They just do. And granted, they were down just like everybody else because it was risk off. When that turns into risk on, look for the financials to make its way higher. I also think because the Fed probably will reduce rates some 3 times this year, look for the Russell 2000 and those small to mid-cap stocks to benefit, the banks and the financials to benefit because they're going to have more business. So look for those indexes and sectors. The Russell 2000, which is TNA, we're going to go with DPST and FAX for the financials, and we're going to try to cherry pick when this thing is bouncing at the bottom. That's the key here. Let's try to use momentum to our advantage. But if we're going to do a cash secured put or an in-the-money covered call, do it like I did with this trade. It's trading at 54.50. We picked that 46 strike. That's some $8.50 out of the money. You feel like you have a little bit of downside there. If things are going to move sideways to higher, and that's all we need it to do, hey, look, we're going to build this back brick by brick by brick. We never said we were going to get rich in one day. We get rich over time. We get rich right. And the way this is going to work is every single trade is a brick to build your empire. And that's how I see it. Look, I've been sitting on my hands largely because a lot of this stuff literally fell too fast. But you know what? Coming out of this, like I've said in all my videos and emails, you have to see the forest through the trees. This too will pass. This is not COVID. This is not the real estate meltdown that literally ripped every economy in half. This is tariffs. It's short-term pain. And notice, it's really only been about 4 days, and now you get some change in policy. Now, I know it's only a 90-day pause, and we're still dealing with China, but do you notice how things are changing? And watch, I bet you they figure it out. Hey, look, make good decisions with the best information you have. The The best information I have right now is that we might be moving sideways to higher. I don't expect anything more, so I'm going to pick the sectors and the indexes that I'm going to use. And hey, if the Russell 2000 moves sideways to higher back to 2000, that's all I want. TNA will find itself right back to 30. We're back in the game. And look, SOXL will get there. All these semiconductor stocks are going to find themselves there again. Look at how AMD was lifted up by damn near 20 points. AMD was left for dead. They see value. Sharks are in the water, and blood is in that water. And sharks are going to feed. You got to believe it. You absolutely have to believe it. Now, do we go straight up from here? Probably not. But what I'm telling you is make a good decision based on all the information you have, and do not overreach. This is not the time to say, I'm going to make it all back in one trade. Not at all. You build your empire with one brick at a time. We do this one brick at a time. You do your trade today, next week, next week, next week. Stay the course. It's what I'm going to do. If you're going to hang out with me, that's exactly what we're going to do. And this too will have been nothing more than a blip on the chart, just like last September when the market fell some 25%. And quite frankly, we really didn't even notice it. We noticed this because the headlines are so tremendously clickbait and so scary. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.